All right. Good morning, good evening, good afternoon, wherever it is, whatever part of the world you're in. Welcome back, ladies and gentlemen. We're going to start off today by going through a couple disclosures, and then we're going to jump right on into our lesson. So let's get started off by looking at our webinar disclosure, guys. I'm going to read through the first one, and then the next two thereafter I'm going to leave on screen. So please feel free to read through them and potentially screenshot them if you want, or request them after the webinar, and we can provide them to you as well. Excuse me. So starting off, guys, Earn to Trade does not accept any liability for loss or damage as a result of the reliance on the information contained within this website. This includes educational material, price quotes and charts, and analysis. Please be aware of the risks associated with trading the financial markets. Never invest more money than you can risk losing. The risks involved in trading are high and may not be suitable for all investors. Earn to Trade doesn't retain responsibility for any trading losses you might face as a result of using the data shown on its websites or webinars. The data and quotes contained may not be provided by exchanges, but rather by market makers. So prices may be different from exchange prices and may not be accurate to real-time trading prices. Any examples used are not a recommendation to buy or sell or a solicitation to buy or sell futures, options, bonds, or binaries or securities of any kind. The information and strategies and techniques discussed herein are property of Earn to Trade LLC. They may not be shared or distributed to any other party without the express written consent of Earn to Trade LLC. Any trademarks or copyrights referenced other than Earn to Trade are the property of their respective holders and not Earn to Trade LLC. So we're going to move on to another disclosure here, guys. Bear with me. Go ahead, please, and read through it carefully. Now moving on to our Forex disclaimer. Almost done. Alrighty, now that we've got that out of the way, now the fun begins. Today we're going to be covering support and resistance. And first off, my name is Chris. I'm a mentor and trader at Earn to Trade. I live in Florida in the US of A. Wonderful weather here at the moment. Beautiful, beautiful 70 to 75 degree range right now. And that's Fahrenheit, of course, because we're crazy over here in the US and still like to use the old English system. But beautiful, beautiful weather. But a little bit about myself. I've been trading for approximately nine and a half years now at the moment. 9.5 years now. I think I'm about to hit that 10-year mark. I've been a mentor for Earn to Trade. I've recently passed my Series 3 and Series 34 as well exams. So that's a little bit of exciting news about myself. I do enjoy trading. My personal preference is Forex, but I also do love futures as well. So those are my two favorites. I look forward to helping you guys out in any way, shape, or form that I possibly can. What we're going to do today, guys, is we're going to cover what support and resistance is. So the goal of our webinar is simply to expand upon what we already know, some of you, and some of you might not know anything about support or resistance. So if we cover something today that you feel you have already heard or you learned in one of our previous lessons, then just bear with me and we'll get through it, and we're hopefully going to take a more in-depth look. So there's something to gain here for everyone today. At the end of the session, we're going to go to a question and answers portion, where if you come up with anything that's confusing, or I need to clarify something I said, or maybe I was talking a little bit too fast, When we get towards the end of the session, I'm going to open it up, and anything that you ask me or anything that you thought of during our time together, feel free to ask it then, and we'll take it a little bit more in depth. So feel free to, relax. I'm going to try to go at an easy pace, have a good time here today, and learn a thing or two, hopefully. So let's get rocking and rolling. The goal is, guys, once again, after this webinar, you should begin becoming much more comfortable with finding support and resistance, and at the very least, understanding exactly what they are, support and resistance levels on your own chart, without me there. So obviously, all things come with time, and practice makes perfect. So don't feel overwhelmed. Sometimes information can seem a little bit, trading information can seem a little bit overwhelming at first. It can seem like you just don't understand it, but as you take it nice and slow, things will start to grow on you, and you will start to understand things. And once you look back, you'll say, holy moly, look how much I've learned. So we're going to switch on over, guys, to a screen share here. I'm going to switch over to show you guys the euro dollar chart. I'm going to be using a Forex chart, okay, foreign exchange pair of the euro to the dollar here. So switching over now. There we are. So here we have a live chart of the euro dollar. Okay, it's currently on a 5-minute interval, which means every little candle that you see there represents a 5-minute period, which I'm sure most of you are already aware of. But those of you that are not, now you're on the same page as us. Okay, so just getting ourselves started off, guys, at the very basic. Okay, the very basic. Like I said, the goal of the webinar is to discuss what support and resistance is, as well as how to properly identify it, so that you guys can do this on your own, so you can truly take advantage of this information. So starting at the very core, support and resistance is really nothing more than common jargon for areas on the chart where price has a difficult time breaking through. Okay, support levels tend to stop price from falling below a specific point, and resistance levels act like a price ceiling that price generally cannot break above, at least for a period of time. Okay, which we'll cover into here shortly. But knowing where these levels are makes it much easier to decide when to potentially open and close trades. So today what we're going to do is we're going to discuss what these levels look like, how to find them, and potentially how to place some trades based upon them. Okay? So we're going to be making some live examples, and like I said, if you feel something is a little bit confusing to you, just jot it down. Don't worry too much about it while I'm speaking now, and just let me go through the motions here, get it all out, because there's a very real chance that I'll probably end up answering one of your questions as I move along before you even need to ask it. So, but jot anything down if you have any questions, and once we get to that question and answer session at the end of the session, I will be more than happy to divulge a little bit deeper and hopefully clarify any issues that we have going on. Okay. So first off, guys, we talked about what support and resistance is. We talked about that in the most general sense, that it's an area that price is having a hard time breaking through, essentially. It can be treated as a pivotal point in the market. Generally speaking, it's an area that the market tends to reach and then turn around and go back the other way. So if you have price moving upwards, you've got bulls in control of the market, another term for the buyers. You have price moving upwards, and price hits a point where it has consecutively reached the same price point and it has rejected, okay, the price is stopped, and then it begins traveling back downwards, and with sellers then in control of the market. This is an example of resistance. Now, support would just simply be the opposite. So if you have sellers already in control of the market, so you have price moving downwards, okay, price moving downwards, and then all of a sudden price hits a point that it has consecutively hit in the past, and it stops, and then begins to travel back upwards. This could be treated as an area of support. Support and resistance can also be treated or be labeled as supply and demand zones. All right. So an area of the market when price falls to, an area of the market where price falls to, stops, and then begins to travel upwards, is the market exhibiting demand. Okay, the market's exhibiting demand. The demand is rising, and as thus the supply can't keep up with the demand, and as a result, price rises. The opposite holds true for resistance. Okay, as price is rising, once it reaches an area where it gets stuck and begins to start traveling back downward, you can treat this as a supply zone. This means the supply is overwhelming the demand. There's more supply than there is demand, and as thus, price begins to fall. Okay. Now we're going to begin taking a look at a few examples here in just a second, but I wanted to get some of this basic information across before I show you some physical examples. That way you have a better understanding of what we're actually looking at. I don't want to overwhelm you. Like I said, one thing at a time. We'll get through this together, and at the very end, we're going to have a very solid question and answer portion, and hopefully get you squared away. So we know what support is. We know what resistance is. We know that support can be treated as a demand zone, and we know that resistance can be treated as a supply zone. All right? We have an idea that we understand the idea that support is generally an area that we expect price to fall to and then move up from, essentially like a trampoline. And we understand that resistance is an area where we expect price to rise to and then reject, getting stuck, and then going back down, just like if there was a trampoline on the ceiling. Kind of a funny thing to imagine, but it should serve the purpose. So understanding that, you might be wondering, well, where can I find support and resistance? Where is it, Chris? What is it? What markets can I find it, and what time frames might I find it? Where is it? It's no use to me if I don't know where it is. Well, simmer down. It's support and resistance is simply found in all markets, all time frames, and on all assets. That's the beautiful thing about it. What we're covering here today, you should be able to find pretty much anywhere, which makes it a very, very valuable, not such a niche thing where you can only use it in this market, in this exact situation, or in this market over here, or on this asset, or only on a 15-minute chart, but you can't use it hourly. The beautiful thing about support and resistance is, like I said, it can be found on any time frame, on any market, on any asset. So very, very useful information. Very, very useful information. It's at the core of technical analysis trading. And if you don't know what technical analysis trading is, it's trading based on the historical data that we have displayed in front of us. Okay, it's where price has been. It's where price has been. It's using where price has been to get an idea of how it will respond in the future. And that is what support and resistance is. We're looking at areas in the market where price is potentially rejected from and anticipating a similar result once price reaches that location again, based on how it acts, of course. Now, what might cause these levels that we're talking about here? What might cause these levels? What creates an area of support? What creates an area of resistance? Okay, there's three main things that people generally accredit support and resistance to. All right, the first one is simply psychological levels. People call them psych levels. There's a bunch of different names for them, but at the core, it all comes back down to a psychological level. Now, what does that mean? As humans, we tend to gravitate when numbers are involved to round numbers. That means we tend to gravitate to even and numbers with lots of zeros. Okay, round numbers. An example of this would be if you took your car, you took your truck, you took your vehicle to the gas station, the petrol station, and you decided you wanted to fill up with gas. Okay, fill up with petrol. When you're looking at the pump, generally speaking, we tend to aim to stop the meter at $20 or maybe $30, but we don't generally aim to stop filling up the tank if we're not filling it up entirely, of course. Okay, we don't generally aim to stop at, say, $21.31, right? As humans, just psychologically, we tend to aim towards round numbers, and this affects us in everything that has numbers in it. And trading absolutely has numbers in it. So traders will tend to add their biggest buy orders, biggest sell orders. They will tend to place their orders, their buy limits, their sell limits around these round numbers. So if a trader is looking to place an order to buy at, say, 1.19999, there's a strong chance that that trader would actually hold off and look to place his order at maybe 1.2 because it's a round number. And there is a bit of a science to this. There's a bit of a science to this. Because it is psychology for people to gravitate towards round numbers, it's more of a self-fulfilling prophecy. Because people expect other people to also be gravitating towards those round numbers, it kind of snowballs itself. So you see stronger reactions around these round number levels, these support and resistance levels, because other people are also expecting other people to buy there, and thus they want to jump on that train as well, so they also choose to execute their buy there, and it just kind of self-fulfills itself and creates that self-fulfilling prophecy style. Like I said, so it kind of snowballs. So that is option one. Okay, that is one of the main causes of levels in the market. Not, I won't say the main. One of the three main causes of support and resistance levels in the market is round numbers. Okay, round numbers. All right, that's also known. The proper term is a psychological level. Psychological level. Okay. Number two. Okay, number two. Swing highs and swing lows. Okay, swing highs and swing lows. Well, what in the world is a swing high and a swing low, Chris? A swing high is an area that the market has reached to, such as a daily high, and a swing low is an area the market has reached to, such as a daily low. Okay, hence the name swing high being the highest price point achieved, and swing low representing the lowest relative price point achieved. Obviously, as you trade the intraday scale, you can find swing highs and swing lows throughout the day, throughout the month, throughout as you move around. Obviously, it's just all it's all relative on where you determine a swing high or swing low to be. But the point is, it's a relative high point. Okay, the highest relative point and the relative lowest point. People often treat the highest point of the market and the lowest point of the market as potential support and resistance levels, giving them substance. So a swing high could be identified. Let's go ahead and use that as our first example here because we have a couple on screen. So if we take a look at the euro dollar right now, which like I said is on 5-minute charts, and we look to the top of the market all the way up here, okay, where I just drew the green line, this would be an example of a swing high. Okay, it's an area price has reached to and has rejected from. Now, in the future, it wouldn't be crazy to expect that price, once it reaches this level again, once it reaches this price point again, it wouldn't be crazy to expect a little bit of fight from the sellers and potentially an expectation of the market to crash from this point because this is exactly what it did in the past. Now, a swing low could be identified as this down here. Okay, if we look a little bit to the left, I just drew another green line. This represents the lowest point on the charts that we can visibly see right now. Now, it wouldn't be crazy in the future if price does continue to fall in the euro dollar, as it is right now. If price does continue to fall all the way back down here, it wouldn't be crazy to expect price to stop and potentially reverse. So it's possible here that with both the swing high and the swing low that we have identified, with the top of the market, the swing high could potentially be an area of resistance that we want to look out for. And at the bottom of the market, the swing low could potentially be an area of support that we also might want to be on the lookout for once approached. Okay? So that's a swing high, a swing low, and another example of what might cause a support or resistance levels. Okay? Or support or resistance level. I apologize, I keep adding S's. But moving along, now the third thing, okay, like I said, three main things tend to cause support and resistance levels. The third thing, pivot points. Pivot points. For those of you that don't know what pivot points are, okay, pivot points are essentially created by the previous period's high, low, and close prices. Now, when I say the previous period's high, low, and close prices, that can be based on a day. It can be based on a number of things. Okay, the most common period size being the daily period. So generally speaking, when people are discussing pivot points, it's being calculated based on the daily scale. Okay, but pivot points can be used just like any other support and resistance levels and treated as a potential area of support or resistance, once again, based upon previous daily highs, closes, and lows. Okay, very simple to understand pivot points. Okay, but those three things, so we've discussed pivot points, we've discussed psychological levels, and we've discussed round numbers. Not necessarily in that order, I kind of goofed them around a little bit, but those three things are the main causes of support and resistance in the market. Now what we're going to do, now it's going to get a little bit more fun, right? we're going to look at a couple examples of support. And then we're going to move on to a couple examples of resistance. Now, immediately right off the bat, I'm going to go ahead and delete the green lines that we have so there's no confusion. All right. I'm going to treat every new example of support or resistance as a fresh green line, so it's easy for your eyes to gravitate to. So like I said, we're going to start off by looking at an area of support. All right. So just right off the bat, one immediately jumps out at me. Okay. Right here. Okay. Right here. This happens to be the 1.16500. Okay. Now, what do you notice about that? 1.16500. This is going to be a double example for us. Why? Because that happens to be a round number, 0.16500. 2 zeros at the end of that number, isn't there? So this is an example of one of those psychological levels coming into play. Round number, people decided to use it a little bit more, and what do you know? It's been used actually quite a lot in this screen. So going back into this, we're going to treat this as an example of support. So we're going to look at this, right? So what we see on the left side of our screen, I'm going to see if I can move. We'll use the crosshair. Hopefully this is visible for you guys. But we're going to start on the very left corner of the screen, and you'll notice that after price moved above this level, it briefly fell down to it, was unable to close below the level. Okay? Instead, price held on to it and then traveled up off of it. This was the very first small show of support on this level. Okay, this is the very first small show of support on this level. And you might be saying, Chris, how do you know it didn't close below that level? When I say the word close, I'm referencing where the candle closed on the time frame that we're looking at. So if we're looking at a 5-minute chart, which we are on the euro dollar, we can see that this candle, the body of the candle, the fat portion of the candle, is actually above the green line. While there's a skinny portion of the candle, which is known as a wick, okay, or sometimes a shadow. There's other names for it as well, but wick and shadow are the two most common terms that you're going to be hearing when discussing candlestick trading. But you notice that the fat portion of the candle closed on top of the line. Right? That's the closing price. Okay, the wick shows where price was during this time period, but was unable to actually stay and close at. So once the 5 minutes started, it opened up here, and once it finally closed, it opened down there, and there was a little bit of a portion where it tried to travel outwards, but just couldn't hack it. All right. This is going to come into play as we go through our examples, so that's why I'm putting a little bit of time into it right now. So I just might as well get it out of the way. People determine support and resistance based on a number of things, and there is a little bit of personal preference involved. Some people determine an area of support or resistance to be an area that price has never, ever surpassed. However, I feel that's a little bit too conservative in my own experience, and a little bit too conservative, honestly, most traders' experience. So seeing the wick push through this level, we don't consider that a break, which we're going to get to after a few examples. A break, which means the level has successfully held at this point. Price has closed on top of the level instead of closing below the level. Okay. So we're going to get back to that. Like I said, don't get too confused. Just a lot of basic words that I do need to cover so you can follow along as we go. But so once again, this is an example of support. Price closed above the level, okay, and then rallied up off of it quite strongly. We had about a 22 pip rally here. And then eventually sellers took control of the market. We started traveling downwards again. And what do you know? As we reached back down to the same price location, right near that 1.165 that we were already talking about, price stopped. Said, hey, no more selling. And what do you know? Buyers began picking it up, and price began to rise again. This is an example of this area of support that we initially were looking at on the left, holding again in the future. All right, so an area price has returned to yet again and shown the same result. So price then moved along. Sellers took control at a point up here, started setting price back downwards in order to test the support yet again. Price came down, and what do you know? We kissed it, came right back down to the same price point, and what do you know? We went back up. And I'm going to try to stop saying what do you know, because I do realize I just said that too many times. I'm sorry, guys and gals. But anywho, so support has held yet again. Price worked its way up. Sellers said, no, we're trying to get through this here. sent price back down, and here you go. We have a third, actually at this point, there'd be a fourth example of support holding. Yet again, price has moved down, unable to close below this level, and has moved up yet again. Now finally over here, we have an example of when price has finally successfully moved through this level, and we have passed through, and this is what we would be considering a break. We're going to come to that. We'll cover that though in the future. So we've got a few examples of support there. Okay, let's go ahead and look at an example of what resistance is. Okay, let's go ahead and find an example of resistance, and we'll use a completely different level because there are a few examples of resistance based upon that support. But we don't want to get a little bit too confusing there. So let's go ahead and scroll back a little bit here and find some resistance. Let's see if we can find a beautiful one for you guys. All right, beautiful, right there. Okay. So right off the bat, okay, right near the 1.164, okay, right near the 1.164, we have a great show of three very clean pivots off of this resistance area that we're going to be talking about here. So here's going to be number 1. Here's going to be number 2. And here's going to be number 3. Hopefully you can see these arrows. Quite a few tests here, actually. Okay. So we talked about what support is, an area that price moves down to, finds strength, price stops, and then changes directions and moves up. Resistance is simply the opposite. So in this situation, we had price travel upwards, reach a level right near the 1.164, okay, become stuck, unable to continue to move higher, reversed, and began traveling downwards. Now, once we see this, we might want to draw our attention to it and say, okay, potentially mark this off on our charts. We might want to be on the lookout, have our orders ready, and say, okay, if we see a similar action again in the future, we might be in a good situation where we could potentially be taking a short. We could potentially be looking to sell, as if we're expecting price to reverse at this level, it would make a whole lot of sense to take a position where that's in cahoots with it, where that's taking advantage of that potential knowledge. So we have an area where price has worked its way up to, become stuck, reversed. Then we were paying attention to this market. Price came up yet again, started becoming stuck yet again. Once again, no fat bodies closing above the line, and rejected quite heavily this time. And this would have made for a beautiful short. In the short-term markets, like I said, we're looking at 5-minute charts. This would have been a 35 pip just fall off here. Beautiful move for the euro dollar. So great example of resistance coming back to its level, showing rejection yet again. And had we taken advantage of this and paid attention to what happened in the past, we could have looked for a short here where we could have caught, like I said, 30, 35 pips in a very easy swing here. And then potentially jumped out down here once the market started showing some strength and an inability to continue to fall lower. But this wasn't it for this level. Okay, so we're going to go back to this resistance. So we had a rejection number 1, we had rejection number 2, fell quite far away. The market found some support down here, which we've already discussed, worked our way up, and what do you know? At the same location, right near that 1.164, we found resistance yet again for the third time. This is another opportunity that we could have utilized. Expectations of it to fall yet again, as we had just seen it do it quite strongly 2 times before. Once price worked its way up here, and we see these heavy rejections, these long wicks on the top of the candle let us know that price is trying to stay or far away from this resistance level, or having a very difficult time even closing near it. Okay, we could have used this information as a sign of the market getting weak around this level and potentially entered in for a short. So here's 3 clean examples of resistance in play. All right. Now let's go ahead and look at another example of support that I'm seeing on the same screen. Now this is going to be another example of support. I'm going to delete the resistance. Sorry, folks, I shifted the charts. I'm going to delete our line. Okay. Now if we look towards the right, we're going to notice, what do we have here? Okay. We have an area in the market where, once again, we have 3 clean tests. The market likes 3s on this portion of the chart. So here's going to be number 1. Here's going to be number 2. And here's going to be number 3. Okay. So what do we have here? Okay. We talked about support, we talked about resistance. Now we're going to go back over both of them just to really staple it in, really to cement it in here. So once again, what is support? An area price is falling to, gets stuck at, and travels up from. Then we keep an eye out for it in the future and to see if it begins to react the same. And if it does, if it's showing strength, there's a good chance that we expect it to do something similar, and we could use it as a potential entry for a buy. Generally, we're looking to use support as a location to buy if we're expecting it to rise up from, whereas resistance, like we were just discussing, we are using as an area to sell as we're expecting price to rise to and then fall from. So here with our support, we had price fall down, nice little crash, become stuck. The wicks start getting long. They start bouncing up from this location. No candles closing underneath. Good example, good show of price having a hard time moving beyond this level. Strong indication of strength around this location. Buyers not letting price go lower. And here's support test number one. Okay, support show number one. Then we came down yet again. So the market said, look, we did the last time we were here. This is when everyone's paying attention. Everyone saw what happened here, so they're going to pay attention. Next time we swing down, market's ready to go. At this point, we could be ready. If we were trading at this time, we could be ready to execute our buy order. We could be looking to jump in. So we saw the market reject strongly from this level right near the 1.1613. Numbers are slightly irrelevant at this point, but point is we identified an area in the market, marked it off as a potential support, came down the second time. It gave us confirmation that the market is really treating this as an area of support, as once again it got stuck at the same location. Coincidence? I think not. So at this point, we'd be looking to execute our buy. We'd be looking to get in, potentially setting a stop loss somewhere below, depending on what our risk to reward is. So we're looking to get in for our buy around this location. We execute our buy. Price moves along. Oh no, it looks like it's coming down on this third example. But guess what? At this point, we still haven't really ever even been out of the money. Price is coming down, but what do you know? We did our homework correctly, and the same exact thing happens yet again, and then we go for our real ride. Price reaches the same price point, and buyers take control, say, no, not today. We don't want to get lower than this point. And we already placed our buy-in over here on example number 2, and it rockets up like a bat out of you-know-what. And go for almost a 60-pip ride on that one. Almost straight up, too. Very, very powerful move there for the euro. So this is another example of 3 shows of support in the market. We can find these all day, and the more you do it, the easier they're going to be to find. Now, we're going to cover something here that you might be wondering, and hopefully I can answer this ahead of time. When I'm drawing these areas of support or resistance, I'm saying the word area or zone. Does an area of support or resistance have to be an exact one-dimensional line? Okay, does it have to be just or two-dimensional, obviously, but does it have to be a line where we are simply just, it has to be exactly to that dot, it has no width, and it's just simply has to abide exactly by that line? This is where you're going to find a little bit of personal preference coming involved. My answer in my personal trading, the answer is no. I actually prefer to consider it a support or resistance zone instead of an exact support or resistance line. I do prefer to draw with a line because it's easier on the eyes, but I'm lenient. I'm lenient with areas that I expect price to reject from. If I expect price to reject, let's go back to this example that we had. So say we're at the 1.16150. Okay, try to remember that number for me. 1.16150, because we saw a great example of support showed already previously. Nice little pivot formed around this location in terms of pivot and price. Am I going to panic when this next example comes down and moves slightly farther beyond than the previous did, while it still has not closed into or below that zone? The answer is no. So let me use let's see if I can use a shape here to illustrate more so how I think when I'm trading. Okay. Let's get rid of the green line. Oops, shifted the charts. Sorry, folks. Okay. This is where my brain is at when I'm trading. I don't think in exact lines, being so strict that I'm never going to allow myself entry into a position, because the market doesn't always work in exacts. It works more so in in proximities and roundabouts. So what we have is an area. I like to think of it as an area that price has rejected from. Now, sometimes if you're new to trading, it can help to draw that line, and you can set yourself a threshold saying if it closes anywhere beyond this, I am no longer going to trade. But as you gain experience, you'll be able to gauge this as a zone. You'll be able to gauge it and say, okay, at this point, I can still see that just because we had a quick spike in price, we can accredit it to noise. Okay, to noise and not a powerful move, not something the market is going to actually commit to. Okay, so point is, support and resistance doesn't necessarily have to be drawn and treated as an exact line to the dot. Say you have a big round number of 1.15. You don't necessarily have to consider that zone broken just because price spikes just a pip below it. We can accredit it to news. It's how price responds overall. We always want to be looking at the bigger picture and not necessarily zoom in too far in the microscope, because we can miss out on wonderful opportunities, or actually just kind of taint our view of how strong an area of support or resistance is. So I really like to refer to things as zones, a support or resistance zone, than necessarily an exact level of an exact number, an exact price that it can never pass beyond. Okay. And one of those things I touched on briefly, I don't care if a wick has pushed beyond my price point. I don't care if a wick has pushed beyond my price point. If it's simply a wick, I can accredit that to simply noise. Noise is just occasional spikes or moves in the market that the market isn't necessarily committing an entire trend to. We don't want to trade based on noise. Noise is the slop and chop that happens while the market ebbs and flows in the bigger picture. We want to always pay attention to the bigger picture, and for that reason, I prefer to focus more so on a zone than necessarily an exact line. But you'll find whatever works for you in your personal trading. You'll find what feels right to you. So we've covered a few examples of support and resistance levels, support and resistance zones. We covered, I believe, we covered some resistance, we covered some support, but I think we covered a little bit more support than resistance. So I'm going to give you another example here of some resistance being shown in the market, and then we're going to go ahead and move on. So another example of resistance, guys, we'll use the zone this time. We'll get wild, get a little bit crazy here with the blue box. So if you focus in on the blue box that I just drew on the charts, guys, you'll notice an area where price has reached to multiple times, kind of entered into a bit of a range-bound market. We're working our way sideways here. At the top of this little range, we have an area that price has been reaching to multiple times and rejecting from over and over and over again. You see a lot of wicks around this location with the occasional push through, but no real closes anywhere beyond. All of these closes are relatively right next to each other. This is another example of resistance. You have a resistance check here. You have a resistance check here. We have a resistance check here. We have a resistance check here. We have another resistance check here. And then finally, price broke through. Okay, this portion over here, big breakthrough. So, but before that, we're going to focus on, like I said, the areas of resistance. We covered support, we covered resistance, we covered support, and now we're covering resistance yet again. So, four or five clean examples here of price reaching into this zone and doing the same thing that it did the time before. So, this is another example of price reaching an area and showing an inability to continue moving on, sellers taking control and not letting it go. A couple opportunities could have been had here. If we pretend that this was a longer term chart that we were looking at, instead of 5 minutes, maybe this was a daily scale. We could have been, if we saw the same pattern, instead of 10 to 15 pips, this could have potentially been 80 to 100 pips. So the example scales up and down, and it is useful regardless. Even though that we're looking at a 5-minute chart, and it might not necessarily be a whole lot of movement off of that zone. I feel it still serves the purpose. So another couple examples of resistance being shown. So we know what support and resistance is. We know what creates it, the three main things that create it. We know what it looks like. We know what resistance looks like. We know what support looks like. And we've covered quite a few examples on we simply have just covered quite a few examples on what support and resistance looks like on a live chart. Now, we talked about what wicks are and their importance to closing at or around and potentially showing respect to an area of support or resistance. And earlier, you heard me mention the word breakout. Now, this is where we're going to work into our next little topic here. Okay, so breakout. What is a breakout? Some of you might already know. A breakout is what happens when we have an area of resistance or support, an area of resistance or support where price finally closes beyond the zone where we're continuously watching price reject from. So using the same example that I just showed, another 4 or 5 examples of resistance at, we see a clean example of a breakout. So we had all of our resistance previously. Then finally, by the 6th time, price works its way up, and we have a big, powerful bullish candle, big 10-pip candle, and it closes way beyond, reaches highs clearly farther than everything else before it, with a close way higher than huge candle closing way up here. Let's see if I can put an arrow on this one for you. Yeah, it's going to be a little bit hard to see. I'll just get rid of that. But right here at the top of this wick, guys, you can see that, well, if we look to the left, there's nothing else around. This is a clean-cut break where it's breaking the level. No longer interested in this level of it with an expectation of resistance to be shown once we see a breakthrough like this. This is something that we do not accredit to noise. This is something that has momentum behind it. It shows serious strength behind it. And we're going to expect the market to continue to move in this direction or continue to find another level of resistance. So it's going to begin looking for its next level of resistance. It's going to be looking for its next point to turn or pivot from. But the point is, the level that we had previously been expecting, we're no longer going to expect price to reject around this level at this point in time as we have broken through it. If we think of support or resistance like a rubber band, this would be the time that the rubber band has stretched too far and we consider it snapped. All right? So this is an example of a break. Now, when price breaks out, right, when price finally closes above an area of resistance, this can provide opportunity to get in just the same. This can provide an opportunity to get in. The way to get in, though, the direction is going to be different, but it can still provide an opportunity to get in just like support or resistance might provide. When we're looking at resistance, we're generally looking to take some type of short near the resistance level while the resistance level is continuing to hold. Once the level breaks and we move our way beyond, just like this candle did, we might be looking to place a buy as the buying momentum, as the sellers have been unsuccessful to contain price underneath this area of resistance. We might look to take advantage of that buying momentum by executing a long on the outside, the top side of this resistance, and look to take advantage of the newfound momentum that we expect to happen. So an area of resistance that has broken, once it finally closes above with a clear-cut breakthrough, can actually be used as an opportunity to catapult ourselves farther in the direction that it has just broken to. The same holds true for support. Let's go find an example of that. So we're going to find a breakthrough of support in which we might be looking for an opportunity to take a short. So right here, guys, boom. Right here, okay. So you see an area in the market that we're going to focus on. I'm going to use a pretty blue box as well, make it a little bit easier on the eyes. Okay. So we have an area in the market where price has kind of plateaued on. Price worked its way up, came up here, and then all of a sudden, that 1.16300, price just seemingly kept finding support quite a few times. There's about 3 clear tests here in terms of just general market swing. We had support shown, all right, but we're not too interested in that. This is old news at this point. You guys all are experienced at this point with what support and resistance are. What we're looking for here is the break. We're looking to take advantage of when price finally breaks below the support. And that's going to happen, obviously, on the right side of the screen. So right over here, right over here, price finally moved and closed below our support zone. Price finally moved and closed below our support zone. We had a break, and actually this wick gives us a very clear example of the commitment here to this break. And what do I mean by that? Let me see if I can zoom this in a little bit better for you. Beautiful. Okay. What we have here is a situation where price finally closed below, and it actually tried to get back above, and the market rejected it. How do we know that? There's a wick on the top end of this candle, and it still ended up closing below. So price actually tried to move back above, but couldn't close above. So this is showing us that the market is committed to the breakthrough, it's committed to the breakout, and this support is no longer looking to be utilized, and the sellers are about to take full control. There's actually quite a few more tests here as you move to the left, where you can see these wicks trying to push above and just unsuccessful with no closes ever back above that support, never being utilized again. But this is a great example of another breakout. So what we have here is price moving through a tested area of support, and finally, after closing below and unsuccessfully working its way back above, we could be looking to execute a short anywhere around this location with an expectation of a bearish move to come, an expectation of a large amount of selling momentum to gain in the market. So when we're looking to sell, falling prices are what we want. So if we were looking to execute a sell based on the fact that our newfound area of support has broken and we have an expectation that there's going to be a large amount of selling added to the market, we'd be looking to get in for a sell somewhere around this location. We could set our stop loss somewhere just above the previous area of support that is now broken, and expect price to move downward and profit off of it. And right on this particular move here, we had a very nice response, about 27 pips, just cleanly right off of this in a relatively short amount of time, all things considered. So this would be a great example of support breaking and actually potentially being utilized as a great opportunity to take a sell, okay, or to place a sell. All right. Take a sell sounds kind of funny, but so we've talked about breakouts, we've talked about wicks, we've talked about what support and resistance is. Let's see what we can do here next. Just briefly going to scroll through the charts, guys, and see if I see anything just that immediately pops out at me that I might be able to further clarify some of these examples that we've already discussed. Like I said, if you have any questions, hopefully while we've been talking here, you've come up with a question or two if you're confused that we can obviously go back over. But at this point, we've talked about exactly what support or resistance is. We've talked about the three main things that cause support or resistance. We've shown quite a few examples of support on a live market. We've shown quite a few examples of resistance on a live market. We've talked about what determines a break, and we've also talked about how we can potentially profit once we have a break happen, once those support or resistance levels go. Obviously, we talked about how we could potentially profit on support or resistance levels while they hold as well. So at this point, we have the meat and potatoes down. So I look forward to some of the questions that you guys are going to bring to me, if you have any at all. Hopefully I did a good job and didn't stutter too much for you guys. But let's see if we've got another opportunity here for you. We're just going to go ahead and move into the question and answers portion, guys. I will look to find some more examples here as we go on, but we're going to move into the questions and answers portion. I want to see what you guys think. Help critique me. Help me help you. I mean that in the most serious sense. Obviously, this information isn't new to me, so I want to make sure that what I'm saying to you is actually breaking through, and if not, how I can possibly do better to get that information across, to clarify what I need to clarify to you. I want you to be on the same page as me, and I want you to be showing me where these levels are or be able to be showing me where these levels are once we're done and out of here. So at this point, guys, we're going to go ahead and move on to the question and answer portion and see what you guys think. So let's go ahead and move on over to that.